All right, more definitions. Market value. This is the buying or selling price of a stock. A brokerage firm. It's a dealer of stocks who does the buying and selling. Brokers, those are the people that work at the brokerage firm who actually do the buying and selling, and they usually work on a commission. Stock exchanges. These are businesses whose purpose is to bring buyers and sellers together. Examples: New York Stock Exchange, NASDAQ. NASDAQ stands for the National Association of Securities Dealers Automated Quotation System. So yeah, I'll never remember that. You probably won't either, but that's what it stands for. All right, there is a huge stock table with explanations on page 663 and 664. Okay, you may want to refer back to this, and I'll show you the table here. So you have your stocks, and then at the top, they have symbol, open, high, low, close, net change, percent change, volume, 52-week high, 52-week low, div, yield, PE, and YTD percent change. The meanings for all of these start on the bottom of page 663, and then they continue onto the page 664. And it's the explanations of every single one of these. So this, for example, stands for the year to date, okay, percent change. PE is the price to earnings ratio. I'm not going to read this to you. Again, page 663, 664. You can use these definitions when you do your homework if you need to. I'm not going to spend your time reading that to you because you won't remember it anyway. You're going to have to refer back to the book. So again, page 663, 664. So example 3A. Suppose you owned 500 shares of stock in General Electric. You purchased the shares at a price of $22.08 per share and then sold them at a closing price of stock given in table 11.1. Okay, so ignoring dividends, what is your profit or loss on the sale of the stock? Okay, so you bought 500 shares, so that's going to be the initial. Okay, regardless of whether you have a profit or a loss, you're going to take what they sold for minus what you paid for them. So if they sold for lower, you're going to go at a loss. If they sold for a higher, then you're going to go at a profit. Okay, so this is where we need to look at General Electric stock, and we're looking for the General Electric, and at the close, they were at $29.36. Okay, so at the closing bell, that's the price that we sold for, or they sold for. So this becomes a $29.36. And so you're going to make a gain, you're going to make a profit. Okay, so 500 times 29.36 minus 22.08. So you made a profit of $3,640. B. If your broker charges 2.4% of the total sale price, what was the broker's commission? So the word of, okay, means to multiply. So the broker makes 2.4% of the total sale price. So the sale price is not your profit. The sale price is what you sold them for. So your sale price is 500 times what you got them for at the closing bell. So then you have to take 500 times the 29.36. And so the broker's commission is $352.32. All right, check your progress 3A. Use table 11.1. Suppose you bought 300 shares of General Electric at the 52-week low and sold the shares at the 52-week high. Okay, so again, we are buying this one 300 shares. Here you put what you sold them for, and here you put what you bought them for. Okay, and then we'll subtract those two. So we have to go back to table 11.1, and we are looking at the 52-week low and the 52-week high. So General Electric, the 52-week low is $19.37, and then the 52-week high is $31.49. So we take $31.49 because we sold them at the 52-week high and we bought them at the 52-week low. So $3,636. Three B, if your broker charges 2.1% of the total sale price, what was the broker's commission? So 2.1, so 0.021, and the total sale price again is going to be the 300 shares times the price of each share. So 300 times $31.49. $198.39 would be the broker's commission.